Good morning, everybody. Welcome to Verified Investing's Game Plan. My name is Gareth Soloway here, Chief Market Strategist. All right, so in today's game plan, we're going to look at the charts, the technicals, what's going on in the market, what are the big movers, what are the trading levels for the day. We'll cover crypto, we'll cover commodities, as well as stocks. All right, we're going to start with the S&P 500. Let's walk over to the big board and take a look at where things are trading. So the first and foremost thing here, this is your after hours yesterday and your pre-market today. So you can see that in general, we're neutral to higher. If you look back over here, this is showing yesterday's move up in early trading and then the same rollover. And this is something I've talked about quite a bit, that there seems to be almost daily this kind of initial push in the markets, whether it's pre-market gapping the markets up or it's during the early period where money is flowing in from the retail crowd and we're seeing distribution continuing. And again, if you've watched these game plans, you've literally seen me talk about this almost every day because it's happening almost every day, and you can't just ignore it. You can't just say like, oh, well, that's just the way it goes. That's what they want you to do. They want you to kind of say, oh, this is just the way the markets are right now. You want to be able to look beyond that and say, what is going on? What is causing this type of action where the S&P was up about 1.5%, 1.6% yesterday and only ended up about 0.5% higher? All right, so again, yesterday we faded. We still ended green across the board, so it was still a day where the markets were up across the board. But again, way off of those highs. And then in the after hours yesterday, just this sideways chop. And this morning, sideways and a little bit of an incline. So they're trying to get this market back up. Let's see today, again, do we see a same sell-off where we see selling into a gap up today, although it is only a minor gap. Now, this is the S&P daily chart, right? So what we have is we have this wedge pattern. The wedge pattern, again, upsloping wedge patterns about 8 out of every 10 times, or 80% of the time, they tend to break to the downside. In this case, that's exactly what happened. What ended up happening here, we had the wide range red candle. We talked about how bad that is for a technical basis. If you're looking at technical analysis, having a wide range candle from here to here, engulfing all of this action over here, that really does a lot of damage psychologically, ultimately, technically to the charts. Now, since then, what's been going on? Well, we came down, we made a low, we went up, we retested the scene of the crime right there. That same trend line again that was support over here and over here is now resistance. At that point, we went down, we retested the low, and now we're on the verge of potentially retesting that again. Now, what type of pattern is that, right? If you get a big wide range candle to the downside, and then you see sideways chop here, sideways action up and down, kind of like this, we know that in general, if you look at this pattern in technical analysis, if you match this up with many other periods where this has happened in the past, it generally gives you a negative bias. Now, that doesn't mean it can't fail. If price were to close above here and then get above this area, then you could say, okay, that has now negated the bearish angle and it would be off to the upside races. But that hasn't happened yet. We have to let the charts tell us. We don't want to ignore the charts. We want to go with the charts because that's where probability lies. All right, let's go on to a couple other things here, guys. If we take a look at some of the movers and shakers today, we do have some like, for instance, Micron is moving up again. Micron had a big bounce yesterday. So again, Micron up 10% yesterday. It's up a few more percentage points today. NVIDIA is also up this morning, although I do have a key level to look at on NVIDIA. So let's take a look at NVIDIA here, guys. The last few days, it's jumped about $20, which is a big 13.3% move. It is approaching a key level here. This is double top at 153.25, and then your upsloping trend line right in that same vicinity. Interestingly enough, if we look at pre-market, look at where it's currently trading, right into that level. So this will be a very, very interesting area today to monitor to see how NVIDIA does. Does it push through? Does it reverse? How does it ultimately trade? All right, next up, Micron. We mentioned Micron. Micron still isn't at major resistance yet. It is pre-market to the upside. We can see it's approaching 104.25. Got as high as about 105.25 in the pre-market action. But if we go to our daily chart, really my first level is going to be around 114. Notice the major high to major high to major high. That will be a significant shortable level on a day trading, maybe even a swing trading basis. If it does break through that, you would look then for this gap fill right up here, which also, by the way, happens to be very close to the 618 Fibonacci retrace right in this vicinity. So again, if I had to play this, and again, let's just game this out. I always like to game it out. I would day trade this level here, resistance number 1. I would just day trade that one for a short, make a little bit of money, and then patiently wait for this level, which is a 2-factor level, gap fill, pivot low, and the 618 fib, and that would be then the swing trade short should it get to that level. All right, Apple is falling to the wayside here today, so we are seeing Apple down again today. You guys know I've talked about those puts that we took pretty much at the highs, the all-time highs on Apple. Apple then proceeded to fall until yesterday's bounce. We did get a small bounce on Apple yesterday. Today it's back down sharply after a downgrade. So it was downgraded to a sell rating. You don't see that happen very often in the markets where these analysts actually have the guts to downgrade a stock like Apple to the sell side or sell rating. But that's what it did do, and again, we are seeing Apple. It has come off of its lows initially, but again, don't be surprised if this continues to head lower. I still have my target zone right here, right at this level, right here at 236 to 237. That's target number 1, and you can see again, just any curl over, move down into that range. That'll be again where I unload half of the put position that I picked up right near the highs up here. All right, Tesla. Now, Tesla came close to my target that I gave you guys a couple weeks ago. I said, hey, it's going to break this upsloping parallel. It's going to fall. It got kind of close within about $13 to $14 and then bounced. But notice yesterday's price action. While the markets remained net positive, Tesla ended flat on the day. And if we flip over, Tesla is now down again today, approaching that 400 even number. And I think, again, that's a signal that's telling you that this technical level of support is pulling it towards that target. So I'm still looking for a 360 handle on Tesla before it finds major technical support in that range. All right, so now listen, we could also talk about some of these other ones. Yesterday, Fubo TV surging 240% to the upside after inking a deal, a distribution deal. We've seen a lot of these Rigetti type stocks continuing to hold up relatively well. And again, I just keep on day trading those Rigettis and making amazing money. They've been great in terms of feeding the live day trading room in terms of that. But the key is this, is that when you see these type of stocks that the valuation makes no sense and they're running a 200, 300, 1,000%. In fact, Rigetti from October is up 2,500%. Again, only 15 million in revenue expected. By the way, I wish Verified Investing could get a valuation like that. That would be pretty impressive. 400 times revenue, forward revenue guidance would be pretty insane to be able to command that type of valuation. But the kicker is this, right, is that tells us there's gambling going on. There's no real fundamental basis for these things, which are warning signs, all right? It's nothing that I trade directly off of. It's more of a red flashing light in front of me that's saying, be aware, this type of gambling, historically, .com high, 2007 high, even 2021 highs. This is the type of things that were going on before a bigger correction. And again, just to go back to a couple of these charts, we should take a look at this one here, and I'll go to the big board to take a look. If we take a look at this is the NASDAQ composite chart, where if we look here, this is your COVID low, your bull market high in 2021, right? So this is COVID right here. All right, and again, the reason I'm drawing your attention, here's your bear market low of 2022. So these are all the major pivots on the market for the last 5 years, basically. All right, so you have your COVID low, 2021 bull market high before that big correction, 2022 low, and guess what we just hit up here? I've shown you guys this chart before, but I want to kind of show you again that this is something that, again, it doesn't really mean that, hey, we're going to crash. In fact, markets don't start with crashes at tops of cycles. It's usually a buy the dip mentality, just starting to make lower lows and lower highs. But you have to take into account when you see something like that and you look back historically and see those other levels. Another chart that I think is so paramount to kind of discuss is the S&P on the logarithmic chart. And again, if I go to the big board here and we'll take a look at this one, this is your S&P chart logarithmic view going back to your 1929 high, right? 1929. I mean, even most of us obviously weren't born back then, but I think we all know what happened right after there when the stock market dropped about 80-85% during the Great Depression. Now, by no means am I saying that's going to happen. In fact, it's somewhat unlikely. But you have to take note of what was going on in the roaring 20s and the kind of gambling mentality of people borrowing money, margin, the loose economic rules, the flood of money into the system. All of those type of things led to the bubble that then burst. Well, guess what? Right here you have your .com high, right? All right, so that's right there. That was your last big bubble correction. And then sure enough, what have we just tagged up here? This is your we'll even call it 2025, but we touched it in 2024, late 2024. And the question again is, just to pose that out there for us all, is does that tell us anything? Do we just disregard that and say, nah, who cares? Doesn't mean anything. Especially what bothers me more is like, if it was just this chart and the NASDAQ didn't have that beautiful parallel, it's like, okay, but when they both align using different metrics, this one going back to 1929, the other one going back 5 years to the lows of COVID, and they're all kind of coordinated, that's what kind of makes me say, wait a minute, let's be a little bit more cautious in the near term here and just kind of take it slow. You know, again, maybe not be all in like all this money rushing in from the retail crowd to gamble on these various plays. Again, we know what happens with those. And by the way, some of these like coins out there that are going right now, excuse my language, but like fart coin, stuff like that. I mean, when you see a 1-point-something billion valuation on these things, all it is hot potato, right? It's musical chairs. You just don't want to, no investor in those things wants to be caught when the music stops. It's just, I want to buy it today, hoping that I can dump it to some other sucker tomorrow for X% gain. And again, that is the gambler's mentality that us as investors that have been around for a long period of time are trying to warn people about, right? Saying, hey, listen, this can end badly, be aware. All right, back to some of the more current charts here. Let's take a look at the Bitcoin chart. And Bitcoin, to be clear, I'm a big fan of Bitcoin. I think, again, digital gold, it just is not into the maturity level that it needs to be that just yet. But again, if we look at this chart, we saw a nice up day yesterday on Bitcoin. But again, if you've been following the game plan, did it really matter yesterday? It doesn't really matter, because all that matters is this line here, which we still haven't gotten to, and this line down here. This is, again, that megaphone pattern here, right? Two lines going out like that. Right? And essentially, you have that type of thing, and you're speaking into it. That's where it gets its name, a megaphone. It blasts it out there. And again, it's two diverging trend lines. And price, again, down, up, and then the idea is and you have to basically watch for which way it breaks. And that's going to be the kicker. Now, what's interesting is this line here, if we look at this upsloping line is beginning to converge with the 108,000. So if we just chop in this a little bit more, we could actually go retest 108, the all-time high on Bitcoin, and it would still be in that range. Now, if that breaks, then you're looking at 115, and I talked about that because, again, this level becomes your next trend line, and that extends out. Right now, it's at 115. It keeps going up, though, because, again, it goes up. On the downside, if we break there, you go down right in that $75,000 range. All right, so, again, as a technician, do I know which direction it's going to go? No, you don't. What you know is you know your resistance, you know your support. Now, you could make a probability analysis, which is, technically speaking, you have this down move here, all right, and this is more bearish. I mean, historically, again, that's what we know from technical analysis as being more bearish, but I would say it favors the downside maybe 65 to 35%. It's not like a resounding 80 or 90% at this point. It's more 65, 35. If it was a little bit tighter, for instance, if this was like a tighter bear flag down in the lower range, well, that's like more like an 80% chance. The more it kind of goes a little bit wacky like that, you can get some of these more, lackluster probability odds, still favoring the downside, but not robustly at this point. All right, a couple other charts to quickly go over here. Let's jump over to the gold chart, which again continues to hold its technical support down here. We do have resistance. This is going to be your big test for gold. If it can get up to about this 2685 level, this downsloping trend line, that will be first major resistance, and we'll see if we can break through at that point, or does it get rejected. The one thing we do know is that at some point, if you extend these lines out, they meet, right? And so price can only stay in a wedge for so long until it gets squeezed one way or the other. And again, it's going to be forced to break out latest by the end of January. So by the end of January, we're going to know one way or the other. I think it'll happen a lot sooner than that, one way or the other. But worst case, by late January, it will have to have broken one way or the other. All right, next up, we have silver. Silver is pushing back above. Yesterday in the morning, we did see it above this area earlier, and then it kind of came back. Today, it's up again. Let's see if it can hold. If it does hold, it brings into account this down-sloping trend line here, which currently sits around that $31 level, and that will be a level to go with. All right. Oil getting a small bounce today, guys. I'll go to the big board for oil here as we discuss it. Finally, there's a trading opportunity. For many, many weeks in the game plan, I talked about how there really wasn't much to do on this. Finally, we got our classic breakout. No confirmation, confirmed breakout right there. All right, so that's where I was like, oh, okay, now we have something to look at. And then we started to make bullish consolidation above that trend line, which is what should happen with confirmation. And that gave us that idea that, okay, here I said I'm not going to short it. It's going to be resistance. This level, yes. And I did short with members of Smart Money Commodities yesterday. We did short oil there, and we are holding that. You're getting a little bit of a retrace. The nice thing about it is, as a trader, I go in always saying, hey, listen, a trade may not go my way. That mentality keeps me safe to the point where if it does continue to break up, I have my next shortable ad level, my dollar cost average level right there. So starting point here to get skin in the game, looking on the short side of oil. If it doesn't go like this, but instead goes like this, then I add to that point there, dollar cost average to the upside. So again, short oil right now, we'll see where it goes. Right now, we are in the money from that short yesterday, but again, we'll keep you posted, or I'll keep you posted. Lastly, natural gas, which was an amazing reversal from last week. Got a bounce yesterday to start the week, and it's coming right back in. Now, the one thing that we're going to be watching here, and I'll do this on the big board one last time, is that in general, we're watching now to see what pattern formation we get. You had a high here and a sharp drop down, right? So what is that potentially forming? Maybe a flagpole, right? Now, what we're going to watch is, do we go like this? If we go like that, probabilities, the longer you get out on this flag pattern, the more likely it heads to the downside and breaks down. Now, a couple sideways days like yesterday and today don't make a bear flag. You need maturity. This is what I would call an immature flag pattern, meaning it's just starting to form, but you don't have that in the charts yet fully formed or mature to be able to say high probability to the downside. If we continue to go like this, now you're starting to talk where probabilities will start to flip more. Right now, it's more of a 50-50 or maybe slight negative bias, but not enough to trade. And that's really the key of it, folks, is that there's a lot of people out there that will say, oh, look at that pattern. You really want to look at it closely. Is it mature, or are they trying to kind of extrapolate that pattern out before it has fully formed? Remember, a pattern that is only semi-formed will have a lot less probability of success than a pattern that is fully formed. All right, and that's where we get into time counts and all these other things that I teach in the Winning Trader series. But again, time is so intricately important to the markets and to your charts. You have to pay attention to it. People that don't will never be as good of traders as those that follow the time factors along with price and pattern. All right, let's walk back here, guys. As always, you guys know I'm here for you to try to unmask a lot of these technical factors, the biases of the market based on strict data and probability. That's what verified investing is all about. Make sure you take a look at the homepage, folks. There is a wealth of technical knowledge, stats, data on there that is so helpful. The idea behind verified investing is to basically take what I know the institutions utilize and pay literally people millions of dollars to give them this information, to bring it to you guys for free on that data center homepage. And again, the idea being to just continue to expand it more and more, getting you guys that information that can hopefully give you more of a direct statistical analysis ability versus following what's the latest trend on Twitter or X or whatever it may be, right? It's all about data. That's how you're going to become a multimillionaire in this business. Sure, we can all hit home runs by accident. We jump in on Doge and it goes up 5,000x, whatever it may be. That's great. But I'll tell you, those same people that did that, most of them lost all their money because they tried to do it again and again, and eventually it takes you out. So remember, it's all about data and all about analysis. No bias, no nonsense, just what are the charts telling us? That's what I strive to do. You guys have a great rest of your day. I'll talk to you soon. Take care.